Hello trade pros. In today's video, I'm going to teach you about 3 common mistakes new traders make that leads to overtrading and potentially disastrous results. Let's jump right into this video. So you know the feeling. You sit down at your trading station and you're very eager and excited to get into this new business. And rather than having to wait for a trade, you want to get into it right away. You sit down in the morning and you promise yourself, I'm not going to take a trade until the right opportunity presents itself. Only to find that a few minutes later, you've done your maximum amount of trades for the day. 5, 6, 7, 8, 10 plus trades. You've overtraded. Here are the 3 reasons that this happens. Reason number 1, and the most important one, is you're probably trading a strategy that's not aligned to the market volatility. A lot of times we'll come up with a strategy and we expect that one strategy to work in all market conditions. But the markets are never the same in any given month, let alone 2 days in a row. So what you need to do is adjust your strategy on a daily basis to the volatility in the markets that are present. One way to do this is to follow the overnight levels. In the overnight session called Globex in futures, there's going to be an overnight high and an overnight low that's established. Using these levels and how narrow or wide they are is oftentimes a really good indication of the type of volatility you could expect in the US session. So if you have a 20-point gap in the S&P 500, it's really unrealistic for you to expect 50, 60 plus points out of the gate. One thing you could do is follow the overnight highs and lows, and depending on how wide the band is, you could start to get an expectation for the volatility. From here, you could decide whether or not you want to run positions, that is, take profit at your initial target and let the remainder or the balance of that position continue upward, or if you're going to take your full profit at your desired target. On a daily basis, the strategy is going to be different. On high volatility days, you have the opportunity to run a small portion of your trade for longer periods of time or more movement in price. In lower volatility days, it makes sense to take the majority of your position off at your initial target because there probably isn't that much opportunity aside from what you've already taken. This concept is all about taking the opportunity that the market gives you rather than looking to take something that you want. You and I are no one in the context of this massive marketplace where a lot of traders trade with one another on a daily basis. What's important is not to look for a certain amount of points or dollars on a daily basis, but to establish the market condition and to be able to extract with a high efficiency as many points as possible from what you do get. So a tip I have here is to quit looking for what you really want and start seeing what really is. Everything happens in the here, in the now, in this very moment when you're watching the charts and you're analyzing real-time price action. Common overtrading mistake number 2, not having a game plan. Let's think about this. If you don't know what it is that you're looking for, how will you know when you do see it? This is where a trading plan is important. You need to have an outline of the exact strategy and what you're looking for and what you will do as a result. Now, it's not one strategy that you'll be trading every day. It could be adjusted on a daily basis in accordance with what we talked about in the prior tip, but it's very important to actually know and have a setup that you're waiting for. A lot of times traders are impatient and jump into any trading opportunity because they don't really have a plan of what looks good, what's high probability, what has worked in the past. What have you back tested and what is your main edge? This is what a trading plan is for. Many of the traders in our community who don't really have as much patience and are trying to take as many trades as possible tend to be the ones who don't have a plan. In our futures course, we have a well-defined plan for you, including a checklist. So you need to sit down and start to think about this and say, what needs to happen in order for me to put my hard-earned money on the table to take a shot on this trade? This is your trading plan. You must have one. Without one, or if you have a lack of a trading plan, you're going to generate a lot of trades that really accumulate and add up, and none of them were really worth taking. I often have a little exercise or challenge I do with our new traders who tend to be losing a little bit at the beginning. I tell them this: review your trades and remove the ones that you know you shouldn't have placed because they're not in accordance to your plan. Remove your emotional trades and look at your net results. How are they different now? 9 out of 10 times, most traders, by removing the trades that didn't follow the plan, are at least to break even, potentially even profit. Now, that's a pretty interesting fact, isn't it? It's not that you're not able to make money as a trader. The challenge is controlling your losses and losing less than you make. It's not about making the money, it's about keeping it. And this is where we jump into common mistake for overtrading number 3. This happens when you need to make money and you're not looking for trades. I see this very often. Traders will say, I need to make $2,000 a day, right? And that's just an expectation that you have. But what is $2,000 a day? It's a matter of scale. What you really need to do is look for trades and not the profit. This is likened to a professional athlete who doesn't look at the scoreboard. If you're a professional hockey player, for example, and you're down 2 or 3 goals, you're not looking up at the scoreboard, beating yourself up, saying what a terrible player you are or a trader. What you do is you focus on the next play. Through the next play and the next opportunity, you could get 1 point back. It's all about getting 1 point at a time, which breaks down to 1 play at a time, which breaks down to what is your action at this very moment to guarantee a solid play. Trading is much the same as professional sports. What we're looking to do as traders is to find the high probability trading opportunities. Rather than think about how much money we need to make in the long term, how much money we need to make to pay our bills, let's look at it as a job. Let's look at it as a process. Evaluate the process for yourself and how well you follow it, but let go of the expectation for profit. Profit doesn't come when you're chasing it. In fact, profit is a reward for being able to follow your plan and being patient long enough to find the high probability, high opportunity trades. The market doesn't really care how much money we need to make, but if we're focused, if we keep our head in the game and we know what we're looking for and we stay patient for the right opportunities, profit will be the reward. The result will be being able to make money on a consistent basis. But that's not the focus. The focus is putting on high probability trades that we're proud of. If you're putting a trade on during the day, be sure that at 4 p.m. when you go to review it in your trading journal and your whole daily activity, you're just as proud of it at 4 p.m. as you were when you put it on. Another hack I have for you is to picture that you have a boss that's going to be reviewing your work. In a 9-to-5 job, our work gets reviewed, our performance is appraised, evaluated, and we're compensated based on that performance. Every single trade that you place creates a track record, your track record, and it's your performance. Imagine you had a boss that reviewed your work on a daily basis. What score would they give themselves? Now imagine you had a boss at the end of the day that would review your body of work. What score would they give you? Now put yourself in the shoes of that boss and evaluate yourself. Give yourself a grade or a score, a quantitative figure on how well you did. Now focus on improving that result, and the profit is impossible to do anything but come your way. All right, so those are the 3 common overtrading mistakes. Number 1, traders need to focus more on the volatility and adjusting their strategy on a daily basis. Every day is a new day, and there come adjustments with that. Common mistake number 2, traders are not waiting for the trade setup and just throwing themselves at anything that comes their way. Our job is not to look for trades, our job is to look for high probability trades. And number 3, don't focus on the money, focus on the process. Focus on creating a track record that you can be proud of. The money comes, but put your focus on what you're doing in the real time, in the moment. By just applying these 3 things and overcoming these 3 common mistakes, you're guaranteed to give yourself a fair shot and a good chance at doing this consistently as a career and a profession. If you want to find out more about common trading mistakes that lead to overtrading, check out our podcast, Mind Over Markets. You can visit it by going to marketmind.online, or you could go to TRADEPROacademy.com and listen to the podcast there, or on any of your favorite platforms. That's all we have for today. Please click the like button and subscribe, and be sure to hit the notifications so you're alerted when we have new content. If you guys want a free training to get started with your journey, please click here and get started now. Thank you so much for tuning in. I appreciate you. Manage your risk and trade like a trade pro. Take care and goodbye.